Hey, what's going on, best ever listeners? I'm your host, John Casman, right here with this new show, Multifamily Mastery. And I'm excited to be here and talk today with our great guest. We're going to be talking to George Otel. George, you got a great background in lending. So you understand business financing, commercial real estate lending. But before we jump into all of that, why don't you take 2 minutes and give all of our listeners a little bit more on your background?
Hey, John, appreciate you taking your time from busy life as an entrepreneur to create this podcast to offer knowledge and insights for a younger generation and hopefully to get a lot of value because in the next couple of years, it's going to be a lot of wealth transfer. So those podcasts are useful to be able to get some knowledge and insights to do the best rational decision when it comes to multifamily investors. So I had a couple of businesses myself. So I started with I had a transportation company. Then I decided I don't like it. I had a couple of years. I like the money, but it was 2012, 2015. 2015, I started the real estate side. We started doing short sales. I was working with a mentor of mine. He was doing like over 40 houses a year from the bank. Then I did some multifamily deals as well. So multifamily, I've been part of multifamily. Multifamily was part of my life since 2016. 2017, I started Multifamily Investors Nationwide. It's a group on Facebook. I mentioned earlier, it's 27,000 people. A
What's
lot
the
of
group
deals going
called?
on. It's Multifamily Investors Nationwide on Facebook. I like the idea of multifamily over the single family because you can manage it better, you can optimize it better, and that's how you can grow. And starting 2018, I started doing business loans and commercial real estate. So my focus right now is commercial real estate finance. We actually do equipment as well. My business is doing equipment finance, working capital, and commercial real estate. I'm focusing on commercial real estate because it's close to my heart. I like those deals. We working with investors, we're working with funds, we're working with private money, with family offices, and we see a lot of potential deal hitting the market. A lot of deals are happening, but banks are exchanging that off market. That's how it works. And because that's not so many deals, but eventually I see deals through the chats I'm part of and portfolio being sold, and there is opportunity. There is some deals they had bad underwriting in the last couple of years based on the interest and cap rates. Now those deals are gonna come on market, and smart and aggressive investors are gonna take the opportunity. So yeah, it's exciting. It's exciting if we adjust ourselves to the risk because you're you're not able to remove the risk, but you can adjust the risk to minimize the risk. So
Yeah, George, you talked about your background, right? Starting off in transportation, not really liking that part as much. So kind of transition more into real estate, start with short sales, eventually getting into multifamily, and then really fall in love with the financing side of it. So let's talk more there because I think it's really interesting. You started getting at loving commercial real estate loans, recognizing that, hey, over the last few years, there were some loans made that, kind of feature some bad underwriting or some bad assumptions that didn't really pan out, and there are going to be opportunities. And I'm really bullish that I do believe there are going to be opportunities for the right investors who are keeping their eyes open and taking advantage of the current market cycle. But financing is going to get really hard, right? So it's one of those things where deals are hard to find, money is easy to find. When easy is easy to find, deals are kind of hard to find. It's kind of that working theory most investors have. And that pendulum's starting to shift a little bit. Can you talk to us about kind of the gap and maybe the area where you serve, right? Because some of these deals, some of the financing opportunities, your traditional lenders may not necessarily fund these opportunities. Tell us more about tell us more about US business financing.
yeah, so absolutely. In current situation, banks, local banks, credit unions, I love them, but in the current situation, current market cycle, they risk reverse, so they taking back. They have already commercial real estate on the portfolio, and they overregulated. We working with, I have over 1,000 lending sources. So starting with the SBA, government loans, private lenders, sophisticated lenders, REITs, funds, family offices. So basically, when I have a conversation with the clients, taking the first 10, 15 minutes, I'm taking time to understand what they're looking for and what is the reality on the market. And based on the information they provide, I'm able to provide a better picture. It's 70 to 80% of the time they like the idea, and a lot of them they shocked because they didn't know. Because you go into the bank, they're gonna give you one option, and it's gonna be yes or no. You coming to us as a brokerage company, we're gonna provide multiple options. We're gonna have multiple options lined up. You decide, hey, you want to move fast, you want to lower interest rate, you want to, to make sure you get let's say a bridge loan. Then after that, we refinance in the 30-year long term, and we provide you multiple options, and we connect. Because we doing this for many years. We know all the lenders who are doing what they're doing and what they're looking for. Because whatever situation you are, there is an option to get out of using the right financing and a proper structure. And I've dealt with many clients. They've been in default, and we help them structure, restructure. Because at the end of the day, the money are out there, they're available, and even your lender is interested in working with you. I tell clients, hey, no matter what situation you are, be available, pick up the phone, and whatever question you have, we are available. Me and my team, I work with the two other partners. They've been doing this for over 25 years. And we have deals. We have deals for 1 million, 5 million, 20 million, 30 million. So it's you getting started. You have portfolio of a couple hundred millions. We can definitely help you, give you an idea of what's going on. We don't charge you to present you what's available. And yeah, it's a lot of value. Recently, we met with a couple portfolio managers. They have over hundreds of millions in a portfolio, and they decided to start a couple loans with us because they like the way we presented and how confident we are to show them. So we it takes a couple of days to bring you a couple options, and it's available. At the same time, if you're looking to buy, to invest, there is funding available. There is bridge loans, there is private money, there is family offices, different funds available. And you just gotta work with the right partner. We are your partners. We're not just trying to provide the financing, but we guide you how to proper do it. We have multiple general partners working with us to provide funding all the time, because we know what's going on in the market. There is high probability we have many loans with the same bank, and you're not alone in this situation. There's a lot of other people in the same situation, and there's high chance we working on this type of loan with someone. So we even help someone buy a building from a bankruptcy liquidation. So let's say you find something from a fire sale, liquidation, bankruptcy, whatever. I can help you finance that, because I have some background in private equity, and we know how to structure, and we have the funding to line that up. So whatever ideas or dreams you have.
Sorry, I want to make sure I understand. There's really two strategies I heard you just talk about, right? So one was, if you are currently an investor and you have a deal that maybe isn't panning out, you have some issues, they can work with a company like yours and maybe either restructure that debt or find a way to kind of fix that situation. And then the second, you were starting to talk more about kind of a new acquisition, and maybe it doesn't qualify for traditional financing, but there's something there. But let's go back to that first one, because I think I want to make sure people understand what you're saying, right? So I'm in a deal, I've got a property, it's not performing. Maybe, we've missed some payments to the bank, hopefully not, but you're in that kind of a situation where you need help, you need assistance. What are the options? I mean, what steps for someone who's listening right now and is like, this is me, like what steps should they take to try to claw out of that situation?
Yeah, so basically we're taking 15, 30 minutes conversation to understand the deal, how they started, how they end up in the situation, to see what option they tried, what options are available in the market. And, let's say they had like a bridge loan and they're not able to find something else. We find another bridge loan. They optimize the property. Then we do a long-term financing. Then, you're good to go. So I have people that are underwater. We find ways to, because there are options available. So the question is, are you working with the right partner? And now is the worst situation to be on your own because there is 8,000 banks in the United States, and they all do things differently. We're talking about banks through FDIC that report to FDIC, like 7 or 8,000 banks. Then it's private money, private lenders, funds, family offices, and they all interested in deals. And a lot of them, they don't talk directly with the borrowers because it's a wide gap. That's why we come in. We have access and we doing those deals, and they trust us because we control the deal. They they feel more reliable on us because we know how to structure right than rather you going by yourself. So it's a lot of lenders, they like working with us, and we had this situation. We got invited into the deal by lender because it was a complicated situation. So we know how to do the deal right to make the things happen and connecting the borrower to the right sources to do the best outcome.
Yeah. So with that situation, right, you're talking about as someone who they're in a situation, if you have, say, bridge debt that has expired or just need to get out of that loan, it's coming due.
Yeah.
Maybe that current lender isn't willing to lend or extend on that loan, but you're saying, hey, there's other lenders out there, and it may not be a traditional bank, but you have over 1,000 lenders in your network that you can go to. So maybe it's a different type of lender who has a different return expectation, or they're willing to do something a bit more creative. But the first thing is you have to talk to people. You can't just make one phone call or call that existing lender and say, oh, well, they don't want to do anything, right? So I think the first step here is you've got to be very proactive, and you're not necessarily going to know every person to call. This is why talking to someone like George and his team may be beneficial, because you have a network of folks. You've probably seen this a number of times at this point, where you would know right away which kind of lenders may be willing to work with them and take on that kind of deal. I appreciate you sharing that context. Let's talk about the new acquisitions, right? So you talk about buying kind of a new acquisitions. Where do you all fit, right? Because I know that there are a lot of lending options. I know people reach out to me, I feel like every day on LinkedIn with like, hey, we can help you finance a deal. And I'm like, I don't think I need your help, right? So where do you all fit in? Where's the gap between maybe where you play and maybe kind of just going with an agency debt or your traditional lending route?
Yeah. So let's say agency debt or traditional lending route, we present you same options, sometimes better options, because it's, your local bank, you heard from a friend. And even though, let's say you pay us the fee because nobody works for free. So basically, we're going to find you much better rates and what's available in the market, because we have access to data and what's going on. And, basically, we're going to help you to structure that right, especially if you don't have too much experience. If you have experience, it doesn't cost you anything to get the code from us. So look, if I'm not able to beat the rate, I'm going to say, hey, just go with the existing lender. I think that's the best. And doesn't make sense for you to come with us. But if there is a chance I can give you better rate and better service and overall better situation, a lot of people working with us, because as I mentioned, we don't offer just one offer. We do different deal, different structures, different things. And another thing to consider is it's not only about the rate, it's about probability of closing the deal. Because I got so many people coming to me like, hey, I have 2 more weeks, 3 more weeks left on a contract to close, because they got screwed. It took the bank the 30, 40 days, and they said no. I mean, that's the situation I mentioned earlier. The banks are risk reverse, and you got to ask them. They're not going to tell you, but I see the data because I'm working with those banks. How many loans are you currently doing like that? Because there is a high probability, whatever situation you are, I have a loan that I'm already working on the same situation. So I'm going to place it with the same bank because I've been doing this for months, for years. So it's just me asking the question to, based on your situation, to what bank I'm sending you that I'm still having deals. I'm currently have the same deals. So it's simple process that it took us over 7 years to to create, to make it happen.
George, you started talking about rates one thing, but you also talk about probability to close, which really comes down to terms, right?
Yeah.
So like rate is just one aspect of terms, and there may be different reasons an investor is willing to accept a different rate or a higher rate, especially if it either moves faster or, they can just get the deal closed and are confident in that. Can you just talk about maybe the terms a little bit more? And what I wasn't clear on is, are you focused on the debt side? Is it potentially debt and equity, or what kind of deals are you typically putting together?
Mostly we do debt.
Mostly debt.
Mostly
Okay.
debt. Yeah, mostly
Yeah.
debt.
Talk more about the other terms then.
Yeah. So let's say somebody, because I tell people the best rate it's right now, obviously you can refinance in 2-3 years because it's gonna be lower. So depending on the situation, probability of closing is much more important than what rate you're gonna get, because we know it's a small circle. Finance is a small circle, and we know who is closing deals, who is not closing. And recently, in the last 12 months, I have many clients coming from the banks because, look, I have portfolio all over with a lot of banks, and they know if I don't like them, I'm gonna take the loans, 20, 30 mil from the bank, and they're not gonna like it, and they're gonna tell me, because I'm coming to you say, hey John, I have this deal. Are you able to get this done for me or not? And you're gonna tell me, George, I'm sorry, but I don't, I'm not the right fit, and I'm moving next, right? But when you're going by yourself, you're not gonna do it. And they say, oh yeah, we're gonna do it, and let me take you through the roller coaster. And at the end, say, I'm sorry, because you don't have somebody to represent you. I mean, you're going to the court with no lawyer. Yeah, when the rates are low and everything is it's in a different environment. Yeah, but now it's a bloodbath. We see owners with the 5, 6, 10, 20 hotels and trouble. I mean, we're talking about tens of millions of potential liquidations, and we're dealing with that for the last couple of years. It's been a lot. It was different assets, starting office, multifamily, different parts of the markets of the country, and if I it's very rarely that we're not able to help. So if I'm not able to help, I know someone that is going to help you. So that's the situation, and it's not about the, basically you gotta pay a small fee based on value we're gonna provide and a long term relationship, and I'm gonna do a lot of work for you. You're gonna be shocked to better like understand at the end how much value. And I encourage people, call me every 3, 6 months for a short conversation. What's going on in the market? What's moving? We working with banks that they're looking to liquidate. So eventually, uh, basically funds we have, we get those, we get access to the tapes, to portfolio that it's going to be liquidated, and we partner with other funds investors to buy that. So that's off market a lot of time. Now it's everything is off market because that the appetite is big for a lot of people, not so many property off market, and we participate in those as well. So you rather looking for finance or finding something, then we can help you.
Yeah, there are a couple of things I want to talk about there, right? So one, you just mentioned, hey, you encourage people to reach out every 3 to 6 months just to check in. Things change. There are banks that are looking to liquidate. There could be opportunities. When you talk about that, you're saying these banks are looking to get their loans off of the books, or these like foreclosures where they're looking for a new investor to come in and take over and buy these assets?
Yeah, they're looking to sell the portfolio. Basically, they mix some toxic assets, basically non-performing, and they may do some performing, or it's a combination. Can be one of them, can be both. Let's say performing, non-performing, or mix of both. So it's can, because when they got a certain point, 10% over, they gotta liquidate because they forced to liquidate, or
Yeah.
risk management. So
So George, you're talking about the way these banks are set up. They have certain parameters, right? So maybe it's 10%. They
Yeah.
can't have more than 10% of their commercial real estate loans that are non-performing or something like that. So if they face that, that's when they have to liquidate. Are you saying then, because many of our listeners may not be as familiar with note investing and buying the paper.
Yeah.
So I want to make sure we all understand. Are the banks at that point, is it a foreclosure where I, as a new investor, can come in and buy that entire property, or am I buying the note itself, but there's still someone else who is the owner or operator, and then I kind of have to manage them and try to get them performing and then proceed with that foreclosure process?
Yeah, it's a combination of both. It's just like just selling just an REO, because REO they sell it through realtors, through brokers. But when they have, let's say, some non-performing, so they package it, some non-performing, some performing, and some, let's say, in a foreclosure process, right? So it's got to be a little bit more sophisticated. That's why we have partners that specialize in that, and that's not so many coming up, to be honest. But we see some vibes already in the market, transactions starting to happen, and probably beginning of next year we're gonna have more transaction like that. So that's interesting. If you're ready, if you stay, ready and study, because it's interesting what's happening. A lot of transaction gonna happen. A lot of high yield opportunity is gonna start. So you're not gonna have time to go to the bank to apply for a loan, because you gotta move quick. I mean, we had a situation. It was over $20 million deal. We were done in a couple of weeks. So you're not gonna be able to go with a traditional lender like that, because they have banks that they move like 2-3 weeks, couple millions, tens of millions. So it's basically you have a smoking deal. You work with private money. You get a deal. You grab the deal off the street. We always tell it that take care of the street, control it. Then you optimize it. Then you do long-term debt, and you're golden. That's how money are made. It's just not on the market. You gotta go off market. Gotta be ready to move fast.
Yeah,
So,
you're hitting on 2 points, right? One is being able to move at speed. When you have that great deal, that great off market opportunity, you want a partner who can finance and fund this deal quickly. The second part, though, is actually the deal sourcing, which is a challenge I know a lot of people face. And when we talk about, hey, I think there's going to be a lot of opportunity, we're getting at this kind of thing where it's not necessarily going to be the deal that gets blasted to everybody and you have a month to review and tour and go best and final and all of that. It's going to be the stuff you're talking about where there's a bank or a lender who just needs to get this thing off the books. And they're going to work with those insiders to figure out who can buy the paper, who can take over the asset. And most people never see or hear about these kind of deals or transactions.
Yeah.
And that's where you want to have those relationships, and you want to have people who can get you into the room, or at least, into the conversation when these deals and opportunities become available.
Yep. We're gonna plan a newsletter for multifamily, basically based on a group, in somewhere in July, after mid-July. So we're gonna have those opportunity for let's say somebody who is solid and has potential to buy those, because we partner with the bank. So we have funds that basically we're gonna buy it, and then we're gonna eat as much as we can, and then the rest we're gonna sell. Or if somebody's big enough to even buy, so we can partner with them, that's another opportunity. So deals are happening every month. I participate in conversation with banks. We have live meetings, and a lot of stuff are discussing. And as you mentioned, transactions are happening, but nobody sees them because nobody's interested. I mean, when you want to sell something, the number one question: show me the money. Show me the money. So you show the money, you solid, you know what you're doing, and that they're gonna sell it. Because I'm not looking to cherry pick. I'm just buying everything. So that's another thing.
Yeah, I love it. Well, let's go in a slightly different direction. You said something earlier that I want to come back to. Yeah. And I think it's really important, right? Because we're always talking about the debt side of it, but we're not necessarily talking about the partner side of it. So I want to start with, and you started hitting at some of this, right? But I want to start with a group like yours. Like when we are looking for kind of that, I'm just going to say the word mortgage broker, right? But when we look for that broker or that partner to help us identify the right loan, what should we be looking for? What questions should we be asking to vet that lending partner?
Interesting question. So basically, you gotta have a plan of what you want to do. So you explain the plan, and based on the question the broker is gonna ask you, you will be able to understand if this is the right broker or you still need to look for that. So that's your you gotta work on your investor instinct to feel it. Because I like having like a natural conversation like we're having right now, and we able to come up with ideas because there's not one deal the same. It's they everything is the same. I mean, everything is different. So many things, so many variables to be considered for things to happen. So now we're in a different market cycle. So people who are able to move fast, that's they gonna get it. So let's say you go to the bank, you get it like 6.95, 6.5, let's say, and you buy a deal from the market, like 7, 8 cap, or you get something on 20, 30% discount, and you're paying let's say 10, 12% for the money. Yeah, it's higher interest. So at the bottom line, you $2, $3 million in equity from day one. So it doesn't matter how much you pay for the money, is how much you keep it. So that's the question, because you buy it right, and then 2 years later you refinance it and you have another meal. So it's you've done everything right. It's not how much you pay, but how much you owe day one. That's the whole thing. Is you gotta move fast. Now it's gonna be a lot of transaction fast, and because basically even the same concept with stock market. You go up on the stairs, on the way down you take the elevator. So you gotta be able to move fast, because it's you wake up one day and say, "Hey, where is all this property?" They're gonna be absorbed by the players that they know what they do.
Yeah,
Transaction gonna happen. The question is, do you wanna be part of the transaction, or are you gonna say everything is bad? And because they happening, we see them, and we sometimes we participate from financing side. Sometimes we look through them when we don't like something. Sometimes we're looking for participating from the buying side. So it's they happening. It's not like I mean, transaction gonna happen. Banks are in a better situation than they were in 2008, and because of that, they trying to keep up the risk mitigation in check. But the private money is raising. Private money, it's getting big and big and big, and it is the way to go. I don't want to deal. I love my banks. I love my local banks. I do the deals that I'm able to do. The rest I do with private, because I mean I don't have time to wait. I mean the time is money. The time is opportunity. So it's you gotta move fast, and it doesn't matter how much you pay. It's how much you get. Because at the end of the day, how much? What's your equity in the deal? You don't want to. Now is not the time to buy property from the just from the market, because I mean you pay high interest, and obviously the valuation is over high. It's overpriced. A lot of stuff is overpriced. A lot of smart investors that I'm talking, they say, "Hey, I didn't buy anything in the last 8, 9 months because everything is overpriced." So for you, I mean, you to get into something that you're gonna get in trouble, you better don't do nothing. So it's
yeah. I
because
heard you say speed a few times. Speed coming up, and when you're looking for that partner, you want to be able to move quickly to take advantage of great opportunities when they present themselves. So that's one of the things you want to look for. But you also talked about making sure you're clear on your business plan, your vision, and you're finding somebody who aligns with that, and kind of trusting your gut through that process. You know, when it comes to the lender themselves, I guess I know most people don't really do a lot of due diligence on the bank or the lender or their credit rating and things like that. Can you just talk to us about maybe mistakes people make or things you wish more people did when they are, accepting a loan or moving forward with a loan with a particular lender?
yeah, so when I started the real estate in 2016, I was for me it's like yeah, I kind of call a couple banks to see what they say, what they do, but I always rely on someone that it has like multiple data points from different perspective, because that's how I got connected with a guy that we bought some portfolio single family. We were flipping them basically. So it's again, it's the question is how many deals like yours is the bank doing? Because I tell the clients I'm trying to be transparent and upfront with them. If how it's gonna work, what is the fee, what is the advantage working with us, what is the disadvantage, and everything is upfront. That's why I'm still doing this for after 7 years. And basically, I know the banks that what they do because I'm paying for data, so I know what they do because they report and everything is available. So I know what banks are closing, what types of deals. Because they look when you're talking with someone, they like the salesperson, right? So they're gonna sell you. He's gonna sell you the dream. He's gonna get you hooked, and after that, he's not responsible for what's gonna happen, yes or no. But when you're coming to us, I'm making sure you're gonna get the best possible option on a deal and finance. And the main thing is I want to make sure we're gonna close the deal. So that's the difference because I don't check that. I see based on the software we use, based on data we have, based on relationship. So I have a couple of filters like, hey, I call my partner, say, David, what do you think about this deal? What bank should we place it with? And he's like, hey, we should place it with this bank because of this or that. And if there is a high probability we still have same deals as yours placed already with a bank. So that's we're not trying to reinvent the wheel. We just whatever is working, we're doing that because you don't have time to look for the options now. You gotta move fast. You have like a loan due, you refinance or you have like a balloon, you gotta do it now. Then you look for long term because most of the time people call us when it's way too late. Like let's say you have a balloon, right? Call us 5 6 months in advance. You have time. First of all, you have time to look for the options. Then you have time to plan. You have time to prepare yourself, and you're not gonna be stressed, and you're not gonna be frustrated. But when you have like a loan due in 2 months, you're already too late, and it's like you don't want to run through the airport. When you go to the airport and you have 30 minutes to check in, it's like you're not gonna make it, and you're stressed out, and the business doesn't run properly like that. So plan yourself, find someone like a finance partner because the right financing is making the big difference now. So that's
Yeah, planning it out makes sense. You want to have that, ideally months in advance, but it's really important just to make sure you've got the right partner. What questions should we ask? You mentioned like access to data, and you can see kind of what the banks are doing. Your average investor doesn't really have access to that, or they don't know where to look. So, is there a question we can ask? I heard you talk about you see the kind of deals that they're doing,
yeah, just
but
ask,
is there
call them
something? Yeah.
because let's say I have like a deal that I didn't do anything in less 24 months. So obviously I pay thousands of dollars for software to see what banks are doing it. Well, I mean, I want to see. I say, hey, show me all the deals in let's say Illinois multifamily 20 to 60 units, all the lenders that they closed, and I have those lenders, right? So that's one point. Then I call them and see, hey, you guys still doing? Because a lot of them they're not doing that. So let's say you don't want to work with me, so giving you advice. Let's say if I was an investor, just call banks around, see what if they do in multifamily. Then I say how many they closed in last 12 months, how because you're gonna know, you're gonna have a feel of what they do and how good they are, and ask them about the loan, the criteria, the underwriting, how long it takes, and all this information. So you want to talk with at least, you want to have like 3 to 5 banks that probably you're gonna be doing business. So you gotta take, let's say, a week to do this, or you can call us. That's another thing. So it takes time because like you want to do the right thing. You don't want to just, hey, I called 2 banks and the one is doing, so I'm gonna no. It's you want to increase the odds of succeeding based on the data, based on the numbers. Because let's say there is like nationwide, I'm working on a deal recently. We basically refinancing the equipment and buying the commercial real estate, which is hot right now. So if any of your listeners they renting the building of the business they working in, we have a deal recently. The business owner was paying $10,000 for the rent. They was renting for over 5 years. We found a loan, an SBA loan, low down payment, 10% down payment, and basically the payment was $10,000 for the rent. Now he bought the property and he pays $9,000. So he pays less and he owns the building, because every time you make a payment on the rent, you pay for the mortgage and you pay for the landlord's vacation, or I call it, or landlord's pension. So you choose which one of those, because it goes to the same pocket. So
Yeah.
I started mentioning about the deal. So we're doing a refinancing of the equipment in order to lower the debt payment, monthly payment. Then we're getting the acquisition of the commercial real estate for the business. So basically, it's 30 banks nationwide. I filter them to 6. I call them and only one approved. How long is going to take you to get to this point? How many banks? I mean, just calling them to reach out to the bank is going to take you a couple of days, because you got to leave a voicemail to talk to the right person and so on. So it's work, but it's possible. It's possible. So you decide, you want to do it yourself, or you're going to hire someone, or you want to work with us.
Yeah, I mean, most of us are entrepreneurs and investors, so we're not trying to sit around and make 30 phone calls to banks, especially if we don't know exactly the right thing to say or how to frame it up, right?
Now it's not the time to play around, because it's it's not the time, because I call it, when the water is calm. Yeah, you have time to do a lot of stuff. But now, is, as my mentor said, don't trust anyone. I mean, you can't trust anyone. Look out the news and everything. I mean, Terry's on, Terry's off. I'm doing this. I mean, that's the situation. It's you can't trust, because like the relationship is much more important than just the transaction. Because like we building like a relationship transaction, not like doing a transaction. Because I have people, they working with us for many years. They may do like a deal once in a while, but we always stay in contact. They asking, hey, what's going on? What's new on the market? So that's the ideal. You want to have, look, you want to have like a good lawyer. You want to have like a good accountant. You want to have a good finance guy that's telling you the stuff. So we doing this, the newsletter, it's gonna be helpful for a lot of people to understand, and we're gonna be more active in our group. And I'm doing all those podcasts to help people to, because there is option available. The money is available. There is too much money available, and there is not enough smart people to access that. So that's the situation. You're willing to listen to podcasts, to John's podcast, to do some study. And I every Sunday I have a call with banks. We have a call with banks, with hedge funds. I didn't like it in the beginning, but every time I've been doing this for a couple of years. Look, it's Sunday, everybody's chilling. I don't care. Every time I have that, I'm gonna have a higher chance to make more money and make sure I don't do bad things to my business and minimize my risk. Because knowing what you're doing, it's there's things that there's things that you don't know. So knowing what to protect yourself, it's very important. Because one thing is to make money, another one to protect it, and the third one to multiply it. So.
And George, you're getting that too. Like, you're investing a lot of your time, even on Sundays, doing those calls. But you're doing that because you want to be the expert in that space. You want to understand for your clients what's going on, what the best options are. And it kind of gets to that who, not how principle of making sure we're getting the right people on our team. Certainly, you could try to invest your own time and knowledge to learn everything there is to know about loans and identifying the right lender or the right partner for your particular project. But you, as an investor, as an entrepreneur, your time is probably better spent vetting deals and putting the team in place to execute and getting the right person to help you identify and ask the right questions on the actual loan. You started talking about something earlier that I want to come back to. You mentioned that there's going to be a great wealth transfer. You also started talking about that deal where it's more of a business that was paying rent to an owner and you help them kind of refinance that. Can we talk about the business landscape? Because I know that a lot of investors are looking more there, looking at SBA loans and things of that nature. What are you seeing today in the business world, particularly when it comes to business acquisitions or buying other existing businesses?
Yeah, I've been in the last 2 weeks, I was at like 7 or 9 podcasts. And even one of the hosts, we doing a business acquisition deal with the host. So it's there's like $10 trillion baby boomers, $10 trillion worth of businesses is gonna transfer in the next 10, 15 years, maybe 5 to 7 years, baby boomers to younger generation. So it's SBA is offering those loans with 10% down payment to do the acquisition. So a lot of time when we do the underwriting pre-qualification, those 10% is get paid in first 2 years. So it's because when you do, let's say, I love multifamily, I like it. I love other assets. So you're limited in what you can do with multifamily. You can raise rents and do some couple stuff around. With the business, you can totally change the structure. Let's say if you're working in a business, you can buy this same same business that you work in. That if you, let's say you're an employee, where it's because it's much easier to buy an existing business that has clients, book a business system in place, uh, employees. Maybe you optimize the systems, you dust off the playbooks, the operating the processes, and you can do upsell, you can do partnerships, you can do so many things to to increase the cash flow of the business. So it's and now is an opportunity. It's sad because we see a lot of basically young people, they don't want to take the business from the family, which is crazy for me. Like, I'm an immigrant. I came here with $3,000 and I had over 5 businesses in the last 15 years. And I mean, I'm still working on Sunday. I don't do it because I have to. I do it because I love it. And I can't comprehend how, your mom and dad is giving you a business, you don't want to take it. It's like, it's sad. And that's the reality. That's the opportunity comes to. So businesses are available for sale. A lot of them not gonna sell because they're not structured right. So if you're a business owner looking to sell your business, will be in your best advantage to work with a consultant to help you prepare for the exit. Because basically, let's say you're gonna pay 20, 25 grand to optimize the system, clean the books. So you're gonna get those money back either way in next 12 months, maybe faster. You're gonna increase the value of your business and you're gonna have a much smoother exit because when you have a messy business, nobody's gonna be interested in buying it because before you sell your car, you want to do a clean detail and wash it, and you can sell it confidently and with a higher price and higher probability of selling rather than people questioning. Maybe your car is better than my car, but your car is not clean, so they're gonna buy the clean one because that's how it works. So
yeah, and I think too, like I know I've talked to a lot of multifamily investors who have grown more and more interested in businesses. For a while there, car washes were the big thing, and self-storage, other asset classes. But we are seeing more businesses, and it's exactly what you just talked about, right? Like there are a lot of folks who have owned these businesses for 20, 30, 40 years. In their mind, they were going to let their children take over the business. Kids have very little desire to run the business, probably because they've seen them truly in the business every day, grind it out for 30 years. And they're like, well, I don't know what I want to do, but I damn sure ain't gonna be that. Like, I don't want to do that for 30 years.
That's
so a lot of these kids are not interested in taking over the family business. And many of them are not necessarily structured to be sold to a new investor. So there is some work that needs to be done there. Coming back from a lending standpoint, though, for that person who's maybe more familiar with commercial real estate and how commercial real estate loans work, how does it compare or differ for businesses and business loans?
So the down payment is 10% only, right? So you can use your money where you bring an investor. Let's say you do the loan and you bring someone, you offer them. You can be a passive position. It's not going to be on the loan. So if you give them, let's say 19% or lower, they can bring the capital, the down payment. So it's only 10% down payment. Then the loan is for 10 years. The loan is for 10 years. And you gotta do a personal guarantee basically on that. And it takes 60 to 90 days to close based on the whole deal, how clean is the deal and how prepared you are.
10-year loan, 10% down. You can raise money or have a private investor partner on this deal as long as they're at 19% or less of the equity.
So any business, any franchises, Dunkin' Donuts, McDonald's, whatever you see, all the brands, everything is for sale. Everything is for sale. Because when I drive, I'm just looking, how I'm wondering how much is this thing, how much is the other thing. That's how I'm wired, because everything is for sale. All the gas stations for sale. Gas stations are cash cows. It's as it is. It's you're milking the cash. You just need to operate it right. So buy it right and operate it right.
Yeah. So gas stations, laundromats, all these things. And the point going back to the lending side, it's your traditional bank likely is not going to finance this deal for you. So you need a lending partner that can help you navigate it. And if you are an investor in multifamily, you're also interested in businesses, having a partner that understands both worlds might be of great value. So I think that's where George and his team can come in and add some value.
Yep. We participated in a deal recently out of a bankruptcy. So they were selling the building, they were selling all the equipment. So we partner basically with an asset-based lender. So the borrower, the client, was able to provide the cash for down payment. So you buy it from the bankruptcy liquidation, basically. So it's you're getting 40-50% discount. So that's another thing. Because like I'm not just doing like you going to buy something from the store. I'm doing the more sophisticated stuff that's deep in the money.
Yeah. But George, I appreciate our time today, man. My big takeaway was really understanding who you have as a partner. Make sure that they understand all of the lending options. You talked about your group having over 1,000 lending sources, and it's important because every deal is going to be a little bit different. And what you need on a specific deal to get it done may be different, even if it's the same looking deal, right? Some deals you may need to close in 30 days. Some days you may need to go with no contingencies. There's a lot of different things that can happen on a deal. So having the right lending partner is really, really important, but also asking the right questions. Make sure you learn more, learn what questions to ask, really make sure that that lender has done deals similar to the one you're looking to do, and align yourself with the right people who can make your deal successful. For folks that want to learn more, connect with you, you can go to usbizfunding.net. Check them out there. George, I want to thank you again for coming on Multifamily Mastery right here on the Best Ever CRE Real Estate Podcast. I look forward to staying in touch with you, and I hope you have a great day.
Yes. Thank you very much. Awesome podcast. You're an awesome host. I appreciate the interesting conversation, and looking forward to create value to your listeners. And let's get the cheese.
I love it. All right. Take care, George. Have a great day.
Thank you.